Hello, welcome back to Budget with Chloe. Today we are going to be doing a Q1 financial update. So let's start with my net worth. The last time I updated you guys on my net worth was at the end of 2024, and there has been a fairly big change. So let's get into it. Starting with my assets, I have a couple of cash accounts. I have my main checking account with my primary bank. That's where all of my paychecks get deposited and my ingoings and outgoings mainly happen. I do have a couple of side accounts which were more so just to take advantage of account opening offers. So Wealthsimple and Simplii both had offers, and I believe they still are currently running promotions. I do have referral links in my description if you want to check them out. I have accounts with both of them and neither of them have fees, and I am quite liking them. I'm just not ready to leave my brick and mortar bank completely yet. But at the end of 2024, the total of these cash accounts was $6,931.65. At the end of March 2025, that was $6,438.10. Now this fluctuates because it's where I pay my credit cards from. Things come in and out. Sometimes I have to pay a big annual bill. So I'm not really seeing that as having lost any money. It's just more of my main hub, and it seems to be around the same amount. So I'm fine with that. My investments, this is mainly my pension through my work and a small amount of TFSA or tax-free savings accounts. At the end of 2024, that balance was $16,582.56. At the end of March 2025, it was $18,352.03. So that's pretty good. Of course, mainly my pension, which I'm paying into every month and is being matched or somewhat contributed to by my employer, and then is also just growing in the market as well. Real estate, so I base my home value on the city assessment for property tax. At the end of 2024, for all of 2024, I was using the number $294,500. And at the end of March 2025, which actually was just when I got my property tax assessment in January, the new value I'm using is $326,000 even. So that's a huge jump, and that effectively doubled my net worth on January 1st or whenever I got that letter. So kind of an artificial increase in net worth, but I still am going to go with it. And I won't know what my house is actually worth until I sell it one day. So for now, I just use the city assessment, which I think is actually lower than what I would get for my house if I were to sell it. So big jump there. My assets in total, I don't include my car just because personal preference, I choose not to. It's quite old. I don't really care to know how much I would get for it. I don't plan to sell it anytime soon. I'm going to run it into the ground. So at the end of 2024, my total assets were $318,014.21. This has increased to $350,790.13. So that's awesome. That's a over $30,000 jump. Again, all the house assessment mostly and my pension, but it counts. So that's quite exciting. And moving on to the liabilities, my credit cards, just a disclaimer, they're always paid off before the statement due date. So while I did capture these numbers at the end of December and March, they would have been paid off as they are every month. And this number will always kind of remain the same as I put the same kind of expenses on it month to month or on them. So at the end of December 2024, the balance of my credit cards was $2,464.59. This is now $2,631.74 at the end of March 2025. Again, it's not like I've gone into debt or anything. They will be paid off before the statement due date, but I just need to include it against my checking account balances there. I could have just taken it off the checking account balances and called the credit card zero, but to be completely accurate, that is what the numbers are looking like And then in terms of debt, if you didn't watch my last video, I have a Peloton, which I bought on a payment plan through a firm, 0% interest for 4 years, which is up next year. My mortgage, and then kind of like a second mortgage. It was called the First Time Homebuyers Incentive. The government of Canada used to offer this. It was 5 or 10% towards the purchase of a new home, which is paid back when you sell your home or after 25 years, whichever is sooner. And you pay back the percentage that you sell your home for, or what the home is worth. So I did have to increase this first-time homebuyers incentive in my calculations, because last year, of course, when my house was worth $294,500, the first-time homebuyers incentive repayment would have only been $29,450. But now that my home is worth $326,000, my FTHB incentive repayment would be $32,600 if I were to sell my house at that price. So I did technically increase my liabilities because of this. At first I was like, what's going on? Because I've definitely paid my mortgage principal down. I've been paying off all the other liabilities. So I was confused as to how my liabilities increased, but it's because my home value increased. So that kind of offsets that just a little bit. So the total of my debts at the end of 2024 was $282,696.47. At the end of March 2025, this was $282,758.60. So a small increase there, which accounts for the payments towards my Peloton and my mortgage, but is canceled out by the first time homebuyers incentive increasing. Say that 5 times straight. Okay, total liabilities at the end of 2024 was $285,161.06. At the end of March, this did increase to $285,390.34. So only a $230 increase, which, considering the first time homebuyers incentive repayment increased by, what is that, $4,000. That's pretty good. So that's my liabilities. So my net worth at the end of 2024, if you watched that video, was $32,853.15. At the end of March 2025, that has increased to $65,399.79, which makes me feel really good because, of course, the cash that I use day to day, it doesn't feel like I'm worth that much, but luckily the home that I pay so much towards is working for me there in the background, as well as my pension, which comes out of my paychecks before they even hit my account. So I'm so pleased with that. I'm so happy. I'm very grateful to have my home. I feel like I work hard to stay in my home, and so it just feels good to see that number and know that I'm doing it. I'm doing life. So let's go ahead and take a look at my spending and my income for quarter one. Here to go over my quarter one income versus expenses. And we'll start with the income. I don't have it broken down, but it's mainly my payroll from my full-time job, $500 that my brother sends me for his rent to live with me, and then some little things here and there, Christmas money, birthday money, things like that. But you can see the average was about $6,300 here, and that makes sense with my gross income. As you'll see, I have my payroll deductions down here. So this is not what actually hits my bank account, but I have been tracking since the start of the year my gross income just to see where all of that money is going on kind of a monthly and annual basis. So my fixed expenses, as the name would imply, are usually the same. My mortgage is a variable rate mortgage, variable payment mortgage. So as the interest rates go up as they have in previous years and go down as they have been in the last year, my payment changes. And so that is why there are some mild fluctuations here. but on average, I'm paying about $1,500 a month. Condo fees and property tax both stay the same. The property tax in July will change to match the New Year's payment, and then it will kind of even out over the course of the last 6 months of the year. My Peloton will stay the same until I finish paying off the payment plan, and then it will just be the monthly membership to use the features. Spotify, of course, will stay the same. The only difference in my internet and TV bill is I had a credit in February because one of my TV boxes wasn't working and there were some issues with getting me a new one sent. So they did thankfully credit me for that time that we weren't able to use it. But the bill is typically, my half is $67.43 for internet and TV. So my phone bill unfortunately did go up. It didn't really seem like much I could do about that. So I'm always on the lookout for new providers. I have been reading about Fizz recently. I think they're quite new, or at least they're up and coming. And it does look like they have some good features. I'm just not sure that the coverage is where I would be wanting. So kind of on the lookout, but staying with my current provider for now. Bank fees, thankfully, I didn't have to pay those in February and March. I was able to maintain the minimum account balance needed, so I didn't have to pay for those months, and hopefully never again, but at least not for the next while here. Moving on to my variable home expenses. Groceries were a little bit high in January, I think, because I went to Costco. Maybe bought a bit of wine that month. I'm not too sure, but on average, I'm spending about $410. And I think my target is $95 a week. So that would be on a typical month, about $380. So I'm not too far off of my goal. And I'm not really restricting myself in groceries. Like, I will pick up a bottle of wine as and when I need. And then, like, I do coupon and I do use, like, points and stuff like that. But I'm not kind of sitting there planning my entire meal plan around the least expensive groceries. So that is something I could do if I was really looking to minimize expenses in that category. Utilities, not too much I can do. I unplug appliances when they're not in use, little things like that. But, you know, it should start to drop as the weather gets warmer. I've turned my furnace off, or not off, but I don't have it running right now. So until the AC needs to be turned on, there should be a significant drop in my electricity bill. Toiletries is kind of hit or miss. It kind of just depends when I need to restock on things. Same with household goods, when I need to buy a little something here and there. That is one thing that I am figuring out as I go, and kind of just going with the flow and adjusting the target as needed. Health and wellness, other than in March when I signed up for a new app to track my food intake, and then signed up for a 5K race later in the summer. Not too much going on there. For my vehicle, gas kind of depends on the month, depends on the prices, things like that. In March, I did go away, and so my gas was categorized under travel for that. But it looks like I'm around $130, and my targets are currently $150 a month, so that makes sense. My car insurance is always going to be the same. And then car maintenance fluctuates a lot, and I'm still trying to figure out how to make that target work the best for me. For quality of life, this one is really hit or miss, it seems like. I mean, in January, I was doing a no spend challenge, and I did quite well, only spending $144 on quality of life, and the clothing was actually something that was a pre-planned purchase. So I was quite proud of myself for that, and you can see the videos that I made about that challenge. But since then, it's kind of increased quite dramatically. I do just want to go back and see what we're looking at for the previous 3 months. Okay, so it averages about $400. So we're trending up a little bit, but March was kind of crazy, I think mostly because it was my partner's birthday month. Birthday month. Kind of crazy, but I think that is kind of what happened. And we did go out of town. So we spent some money on collectibles, things like that. Yeah, this is something I'm working towards keeping down, but also just being mindful of and planning for. I want to make sure I'm getting the targets right for these things in a way that makes sense with my current income. In terms of debt, I'm quite happy that I've been paying this $200 every month. This is something I've mentioned before that I have kind of put on the back burner, but in 2025, I really wanted to commit to paying this every month, and I have so far, including in April, so that is great. Gifts have always been kind of a problem area for me. I try to budget them with targets, but I kind of get out of hand when it comes to gifts for friends and family. So that is why March is kind of crazy there. I'm hoping to spend, my targets add up to $120 a month for gifts for all gift categories, and that includes Christmas. So we are above that so far for the first quarter, and that is something I will try to work on getting back down to the average by the end of the year. Travel so far this year on average is $320 a month. My target is $230 a month to set aside. This trip was only a 4-day road trip, so that does feel quite high considering we want to go away in July for almost 2 weeks. So we're going to have to do some more saving for sure and try to figure out a way to do that a bit more mindfully and cost effectively. Home maintenance, I haven't had a lot going on. I am in a new build, so that is something I haven't really had to worry about so far, knock on wood. I just kind of have a small sinking fund going, and I'm just seeing how things go and planning to increase that in the future as some of my debt expenses go away. And then we have payroll deductions. Of course, this comes out before the paycheck even hits my bank account. And this, again, was just for tracking purposes to see where the money was going and kind of at the end of the year what that looks like in terms of my percentages. So in terms of income minus expenses in January and February, it was both positive numbers. March did take a dip, but that is okay. Overall loss of around $660, but I did save up for that trip in March. So that kind of makes sense that that was a large amount of money that came out all at once. So that is my Q1 financial update, and I look forward to seeing you in another 3 months to check in mid-year. Thanks for watching. Bye.